So I am super excited to be here talking to Tim Flocka. And Tim is the executive director of something called Commonwealth. And Commonwealth is a nonprofit. And it's a nonprofit dedicated to improving financial security for populations who are often excluded from access to financial services. So Tim's organization has done some really interesting things in FinTech projects actually to accomplish this objective. And he has some very interesting things to say about how policy and regulation have shaped that. And then together, we're actually all going to learn about something called price-linked savings. Yeah. So maybe, first of all, Tim, how big a magnitude is this savings problem?
Sure. And maybe I'll offer a few statistics on that front. Many of you probably know these, but if we take one measure, which we view financial security really at the root of that is savings, and even more at the root is probably liquid savings. If you all represented the US population from about here over, you would tell us that you couldn't handle a $400 emergency without having to borrow or sell something. Between 44 and 47%, this is Federal Reserve research, of the US population says they can't handle a $400 crisis, again, without borrowing or selling something. And by the way, charging it on your credit card and paying it off next month, that's not considered borrowing. So that, I mean, to me, that's a really jaw-dropping figure. It means that there's, roughly a 1 in 2 chance that Americans are that close to some sort of financial crisis. But there are a few more dimensions I'll just throw out. If we think about inclusion, the FDIC tells us that, here, I'm checking my notes to make sure I have them right, about 27% of households in this country are either unbanked, so not using the banking system, or underbanked, so they're marginally using the banking system. Obviously, that's an important feature of being able to build financial security. We've seen through a lot of research, including some done right here at NYU, that we know a lot more about volatility. Income volatility is a lot more extreme month to month than we had previously understood. Jonathan Murdoch here at NYU and his colleague Rachel Snyder from the Center for Financial Services Innovation have found that in 5 of 12 months, low-income households they study see a 25% swing in their income. So you can imagine how that would be, make it more complicated to manage and achieve financial security. Just a couple more, credit. Almost 20% of us are either credit invisible or unscorable, right? And so you think about how important it is to be able to access credit to manage that volatility, as well as to get a job or to buy a house, as qualify for a lease, et cetera. Financial capability, so how good are we at making decisions? FINRA has studied this. 37% of us can answer 4 out of 5 basic personal finance questions. So that's pretty jaw-dropping. And the final point is that these are not, these statistics I'm offering are not distributed the same for everybody, right? White households in this country have a median net worth of $171,000. African-American households in this country have a median net worth of $17,600. That is a 10x difference, right? So these are the sorts of issues that we're thinking about, and we think that the good news is that there's a lot that this community can do for that, and maybe just to do a little more on the half-full side, our colleagues at the Center for Financial Services Innovation have rightly recognized that just because you're poor or low middle income doesn't mean you're not spending money on financial services. We actually this population spends $141 billion a year, and that figure has been growing at 5.6% since 2009. So there is a need there. That represents about 138 million Americans. So we see opportunity too.
Yeah, so a very large magnitude problem. And so with Commonwealth, what's the mission of the organization, and how do you go about addressing this, what sounds like a really large problem?
Yeah, so I mean, the mission is to build financial security and opportunity for financially vulnerable Americans by testing stuff out, pilot testing it, and finding things that work, and then seeking to scale those innovations. And typically we're talking about product innovations and policy innovations. That's really the 2 sides of it.
Yeah, so I mean, one of the things that was quite interesting about some of the work you've done is that you kind of acknowledged that one of the explanations for why people don't save, even if they want to, is they have behavioral biases or whatever. So can you start maybe by just describing this idea of price-linked savings and how that kind of taps into a behavioral bias, but at the same time helps solve the problem?
Sure, and maybe I'll do that with a quick illustration. A quick poll of all of you, hopefully you'll play along. If I offered you the chance for the guarantee of a very modest return, anybody have a savings account today? Anybody know what it's paying? Okay, so you can imagine that as what we call a guaranteed but modest return. Or I said, no guarantee of anything, but there's a chance that you'll win something that would be transformational or even just, a really big deal, however you define that. How many people still want the guaranteed return, and how many of you want to go for the probabilistic return that could be really meaningful? All right, I didn't set it up to actually in a clean way. But that's the core idea, is that most of us are much more excited and engaged about the chance of something really meaningful happening in our financial lives or otherwise than something that's just, a yawn. So we have taken that core insight and used it to make savings fun and interesting. I'll just interrupt myself to say, if you're in the business that we're in of trying to promote financial security, if you're a marketer, it's a really tough road to hoe, right? To sell savings as a behavior is really, really hard. And so what we're constantly, or have found ourselves on the lookout for, are ways to take that, those vegetables, and make them more attractive, right? And so it turns out that chances to win are really popular, and what you can do is say for every certain amount that you put into a savings account, for example, you earn a chance to win a prize. And if you do that more, you earn more chances to win. This might be a good place just to note that we have in this country a more than $70 billion lottery industry. We're based in Massachusetts, where several years ago we had the distinction of the highest per capita lottery play of any state in the country, north of $500 for every man, woman, and child every year in the Commonwealth of Massachusetts.
Some people say a lottery is a regressive tax, so you'd expect that maybe the same population that's struggling to save is actually participating in these lotteries.
I think the lottery industry strenuously objects to that. I think a lot of people think that that's true. But I would say it this way: if you're looking for pots of discretionary spending that you might be able to redirect into savings, I'd be really happy to go after that $500 on average per person.
Yeah. So what you're talking about in price-linked savings, the analogies would be things like premium bonds in the UK, right? Where you're basically just taking the coupon stream and reassembling it in time to give people a feeling of surprise when they receive that payment, but nobody's losing principal, is that right?
That's right. That's been a line in the sand for our work. Like any idea, you can mix it and push it and pull it in different directions, but yeah, our principle has always been we're not interested in any version where you could lose principal, two different uses of principal there.
Yeah. Now you guys, maybe you could describe a little bit the rules around this in the United States, because I think until very recently, price-linked savings really weren't allowed, and your organization was instrumental in helping lobby to change this rule. So maybe explain a little bit about how that worked.
Yeah, so going back about 10 years ago, we were aware of this use of prizes in other countries as a very successful model to get people to do this hard thing of saving. And we sort of wondered, why wasn't this happening in this country? And the answer is that private lotteries are illegal in the United States. Now, 44 states then give themselves permission to operate a state lottery. Many of those states also have provisions for small charities to run sort of, church-based raffles and the like. But in general, to say to somebody, you do this thing that's good for you, save money, and you can earn a chance to win, and you can only earn it by doing that, was illegal everywhere. However, we discovered a loophole, and we were able to pilot test this in the state of Michigan only with credit unions. There was an obscure law on the books that made this possible. And so that was really the toehold. And in less than a year, working with 8 credit unions there, we saw nearly 12,000 people open up this kind of account. It was built on essentially a CD. And by putting $25 in, you earned a chance to win either a small monthly prize, and you were entered into an annual prize or drawing for $100,000, right? So that provided some marketing oomph, save money and you'll win twice. You'll have the savings, and you could also win $100,000. So from that, then we started talking to state legislatures, and they asked, what could we do? And at this point, we've now helped 25 states to change their rules to carve out a new kind of permissible lottery called a savings promotion raffle. And that ultimately led to Congress introducing a bill that eked through in 2014 that removed some federal prohibitions on banks being able to offer products like this. And it was very much a story of getting out there, rolling up your sleeves, getting a product in market, however first generation or prototypey it was, getting some real data. We studied those 11,500 people who enrolled in Michigan very closely. We could tell you that 44% of them had household incomes under $40,000. More than half reported that they had not saved before. And then, especially at the state level, policymaking is a very accessible opportunity in a lot of ways. You can meet lawmakers. This didn't have any price tag attached to it, right? So an idea that could promote financial security for people who need it, didn't require a budget expenditure, was an idea that made sense to people, and then it's built on itself since then.
Yeah, so there is some evidence that it actually does help people save more.
Yes.
Yeah. And then you guys have also been advising or working with a few people who are attempting to kind of commercialize this or spread it, and one of them is Walmart. So maybe you could just describe the business model there that Walmart's working with and what's going on there.
Yeah. So our model as an organization, we are, a relatively small operator. We know that we don't have the reach, obviously, of large players. So it's always our intention, our aspiration to influence and feed good ideas to large distribution systems. So in that spirit, several years ago, we co-organized a meeting with the Boston Fed for the prepaid card industry. For those of you who don't know, prepaid cards are used by many of those people who are or underbanked as a substitute for a checking account. And we said, these are growing in popularity, these prepaid cards. They're very transaction focused. When is the time to do more, to add more value for consumers, and in particular to introduce a savings feature? Both Walmart and its long-standing prepaid card partner, Green Dot, attended that meeting at the Boston Fed. We talked about the success of Priceline Savings. They looked at that and they said, we could do this. This is not hard for us. So, that still took 18 months to get something in market, but they launched a prize-based savings feature on their Money Card, which is their premier prepaid card that serves well over 1 million Americans. And what that means is now if you have this card, you can put money into a savings vault, it's called. It's kind of mental accounting envelopes, if you will, a savings envelope. And every time you put money into that, you earn a chance to win prizes they've given away. This has been in market for about a year now, and there are more than 200,000 cardholders who have used the feature. Collectively, they've put $540 million into this savings vault. And Walmart and Green Dot have awarded $175,000, $176,000 in prizes. So
cool. And so, how does Walmart see this? Why do they like this thing?
So I think it's a combination of things. It's long-standing Walmart branding. First of all, I shouldn't speak for them, right? So I'll speculate, but I don't want to be misunderstood as representing them. But just in my own life as a consumer, Walmart will tell you that they're about saving money, and I think they usually mean that in terms of consumption. But I think they see a connection to helping people have savings as well. I think that was a connection. I think that they agreed with this general arc that these transaction-based prepaid cards have more potential and they'd like to add more value for their customers. And then I think it's an intuitive observation that the more business their customers do on their own products and the more that they're, it makes sense that it would all fit together there. Yeah.
How about, I think there's other FinTech startups actually working on this idea as well. Are you working with them as well?
Yeah, we, the gentleman who spoke first from Bain this morning talked about being a specialist in something, even if it's very obscure. Well, we have become the specialists on this particular topic, so we do find that most of the startups who are thinking about using prizes to promote savings behavior find their way to us. One that's in market and has a good deal of traction is Long Game. Those folks you can find them. There are a number of other ones, and we take that as a very good sign when we see startups paying attention to an idea.
So what about smartphones? Because all of this stuff is happening on apps on smartphones, and with the latest iPhone costing $999, triple XL, whatever, does this population that's underserved by financial services, do they have access to a smartphone?
They do, yeah. Now, Pew studies this issue, and they will tell us that, first of all, 95% of us in America have a cell phone of some kind. 77% of us have a smartphone. That figure only falls to 64% for households with incomes under $30,000. So overwhelming majority, approaching 2/3 of really the poorest households have smartphones. If you push that up to the $30,000 to $50,000 income range, it rises to 74%. So now it's almost on the national average. So in short, smartphones are ubiquitous. Interestingly, of those who are smartphone exclusive, who do not have any broadband access at home, then you get kind of an inversion. So 21% of those who have incomes under $30,000 a year are smartphone dependent. They only have smartphones as their connection to the internet. That figure for folks with more than $75,000 of income drops to 5%, right? So it's actually stronger penetration in the lower income.
Very, very interesting, yeah. So what about the idea that somehow this does invoke the gambling instinct, you know? And is there a line in the sand that you feel that we should draw on price-linked savings where it doesn't tip too far into lottery tickets?
Yeah, well, a couple of thoughts. I'm glad that that comes up. I mean, what we emphasize is winning. That really seems to be the thing that we all resonate to. As I mentioned, the line in the sand that we feel strongly about is any approach that allows people to be worse off in the sense of they put $1 in and they could get less than $1 back out. Yeah. Especially in our developed economy where interest rates are fairly low. I suppose you could argue that if they are foregoing a guarantee of some modest return, that people are worse off. That didn't seem like a real concern for us. But we're very clear we don't want people to lose any of their savings. But for the most part, consumers really like this. What we've seen over 15 plus years we've been doing this is I have yet to really meet somebody who needs persuading that saving money or having savings is a smart thing to do.
It's making it easier somehow.
That's right.
That you need, yeah.
And what that translates to is if you come along with some way to do that and make that easier for people, there's a level of appreciation for that and a sense of I've always aspired to do this, but it wasn't my identity. I didn't see myself as someone who could do that. If it takes a prize or a catapult or whatever it takes for someone to leap over that psychological wall and land on the other side and go, look, I've got several $100 in a savings account. I didn't think I could do that. People are quite forgiving about what the catapult looks like. They really appreciate being on that other side of the wall.
Yeah. So what about the idea that sometimes these payments can be almost like microtransactions? Because historically, financial institutions, especially here, have struggled to be profitable with tiny, tiny transactions, unlike, say, M-Pesa or whatever that's pioneered this kind of thinking. Does somehow price-linked savings, or are there other examples that somehow facilitate this idea of even saving small amounts is beneficial?
Yeah, I think that's a great question. I mean, in general, the smaller the amounts, the harder the business model gets. That's even more so with savings. I guess I would go back to the Walmart example to pull out two themes. Noteworthy about that example is that it's bundled in a different product, right? So there is a product that existed that has a profitable business model before the savings feature was added. We talk about integrated products. I think there's a lot of potential in taking some of the less profitable or the tougher either categories of finance or size, the micro ones, and asking ourselves where can they be piggybacked or integrated into other parts. I like that too because I think consumers tend to lead their lives that way. Mm-hmm. They don't wake up and say, today I need a credit solution. The language we use on the industry side is very different from consumers' experience. The second reason I wanted to draw out the Walmart example is we need to be looking for stakeholders who have an interest in these outcomes as a way to deal with the tough economics, right? Yeah. So both Uber and Lyft, for example, are now in the business of delivering basically financial services, right? They have checking account products, they have payment solutions. They're not doing that because they think they're going to get richer on delivering financial services than their core business. They're doing it because they recognize that it's part of their strategy to attract
the core business.
Yeah, and so looking for those third-party stakeholders, I think, is part of how we deal with the tough economics.
Yeah. You guys have also pioneered building some FinTech games and what other things are you working on at Commonwealth?
Yeah, well, so I'll pick up on that one and say we actually have a gamified experience that facilitates micro savings payments called Savings Quest, and happy to talk with anybody about that. But one of the things that we find over and over again, and I imagine all of you or many of you in the room may have a version of this, is when you're talking about consumer-facing products, it's engaging people, right? Mm-hmm. And we're not selling consumption, we're not even selling physical objects, right? So it's a tough road to hoe to get people's attention. And it turns out that the use of either fully contained video games or game elements, I mean, there's been a lot of attention on that over the years, but the thing that seems very clear to us is it really does deliver in terms of grabbing people's attention. We had a chance to work with Staples, the office supply company, and married up some of the gaming work that we had done to try and get their associates to pay attention to their 401k plan and to sign up for it. And I got to tell you, the motif of the casual game that we had built centers around being a vampire and having to save for retirement, which is really a bummer because you live forever, so you really have to get busy. when you go out into Staples break rooms and you have a poster on the wall that is a giant picture of a vampire fang, and it has, minimal copy. I don't have a visual, I wish I did. Like, that is the antithesis of most employee benefits communications. And it doesn't necessarily say, now I need to save for retirement, but it sure goes, what in the heck is that, right? And so when the postcard then drops or the email hits and there's a link to click on to go, try out this game experience, you're much more likely to have, to do that. If you can get people that far, right, to take that first step and come look under the covers, and then when they look under the covers, instead of finding a wagging finger telling them to do something that's intimidating,
no nanny state, right?
They find some, or just hard, right? Like, give us your money, or make this investment decision. You can sort of draw people in. Their anxiety ebbs. They get interested in solving the puzzle, which is the core of any game, and now they're in a very different psychological space in terms of taking action.
So do you see any downside at all in some of this financial innovation that's devoted to or targeting this underserved population? Are there risks there that we maybe don't even see yet?
Yeah, well, I was struck by something that was said earlier this morning in the context of artificial intelligence, that one dimension we want to think about is how large are the consequences if there's an error, right? I think at the moment, when it came up, it was, driverless cars maybe be an example where things can go really wrong if there's a mistake. I guess the analogy I would draw is that, as a general rule, the lower your income, the higher the consequences of a small mistake.
Vulnerability, yeah.
Right, and so you think about that volatility. Anybody heard of an app called Digit? Anyone? You can check it out. Digit has built a very cool automated algorithm to take what it perceives through machine learning, I suppose you would say, what it perceives to be extra money in your checking account and pull it into savings and perhaps even investments. I haven't kept up on it. And people who use it love it because it's sort of turn it on, they don't have to think about it, right? And you can see the idea after they see enough of your inflows, they can sort of kind of tell when there's a windfall, they shave a little bit off, you don't do anything, seems great, right? But if you push that down to someone who has high volatility and very low income, you could see how that might not be the answer. Maybe someday it will be. So I think we need to be thoughtful about how that happens. And then the second thing, which is a little possibly off topic, but I personally got into this business because I was really persuaded by this idea that if we're serious about trying to attack poverty, we need to get beyond income and think about assets. That's really where we get to the question of people's long-term well-being and trajectory. We've done a lot around income over the years. It's all good. It's necessary. People need to eat. They need a place to live. But none of that was engineered to get people to a different place. So to your question, I think FinTech is fantastic. We do, it's really where we spend a good deal of our time. But I don't think it's necessarily a substitute for harder conversations we need to have about a society. We're not going to FinTech our way out of poverty in this country. So that's, I think we need to be honest with ourselves about that.
Yeah. What a great conversation. Thank you so much.
Thank you.
Yeah.
Okay,
Big hand for Tim. Yeah, thank you. Very cool. Okay, everybody, so what a great morning. And now you get to have a lovely lunch and some cool conversations over lunch. So again, just a quick reminder, all the UC rooms are in a horseshoe around this auditorium on this floor. LC is one down. If you're going to Ken's show, that's on the main floor by the lobby. And if you're going to Dream Forward, it's in the Commons, which is just in the building next door. So have a great time. Enjoy your brain dates.